Good morning. Welcome to our Looking for Funding webinar. My name is Roy Butcher. I'm one of the partners here at Raffingers. I hope you can all hear me. Just go through a bit of our credentials as a firm and what we represent. We are an award-winning accountancy firm that specialises in strategic business planning and commercial solutions. We are featured in the 50 plus 50 accountancy firms in the UK. Recently this week we were featured number 76, which is really good news for us. Our purpose is to truly impact the lives of our clients and as people, as individuals, to really make a difference. We achieve this by helping you to find your personal freedoms, by ensuring you see the maximum results at all stages of your business cycles. Now, we try to think big and be very proactive with our client base. We offer a very holistic approach in order to provide our clients with clear commercial and financial advice and solutions. Our core services would include strategy. So we work with many clients looking to expand their operations, looking for exit routes, etc. We are one of the only certified firms in the UK, certainly the largest, that are qualified in a new methodology called Profit First. We are releasing separate webinars on that if you want to find out a bit more. Wealth management, of course, corporate finance, and with me in particular, that's on the sort of funding side, which is obviously why you're here today. Tax planning, forecasting and management information, systems integration and organisational management, alongside obviously our core work, our compliance work, such as accountancy, taxation, audit, VAT and payroll services. A little bit about me. I've been in practice for over 25 years. You can see by the bags actually. Over 25 years, I've built up a wealth of experience in accounting, taxation, financial analysis is kind of my area. And I work with mainly owner-managed businesses, and I've kind of specialised in the more creative sectors of that area. I've also specialised in the corporate finance side, and I work closely with clients to manage, identify and source funding. I'm just checking the Wi-Fi, apparently. It's our IT. I'm also the IT manager, by the way, and yeah, everything's gone slightly wrong.
Sorry, bear with us. You want 8 minutes? 8 minutes. EI.
Have you done DE?
Yeah. Where has it gone? Okay, we're back.
Oh, we're back. Oh, hello again. Yeah. So a little bit about me. I think we've done that bit, haven't we? Right. I'm really excited today because I'm joined with our Capitalise partners, Oliver and Kaylee. I'm going to pass them over now to make some introductions.
Cool. Hello, everyone. I'm Ollie Cummings, the Commercial Director at Capitalise. I'm an accountant myself of many years, and I'm now kind of helping grow Capitalise.
Perfect. I'm Kaylee Graham, one of the partnership managers at Capitalise. My kind of prior experience is all kind of commercial and corporate banking based, and now working with accountants to help their clients.
Cool. So first, what are we all about? And thank you very much, great firms as Raffingers for helping us here. And you can see that. So we're a new relationship model, and we've done well over 150 million of lending so far to SMEs. But what's very important there is we've not done that directly to businesses. We've actually worked with your accountants, particularly Raffingers is one of our key partnerships. And what we do is we give Raffingers the ability to have 100 plus lenders, and they have instant access to those lenders. So when they're talking to you about funding and asking for advice, actually you can get, when you're talking to them, you're actually talking through us to 100 plus different funding opportunities. And what that means is you can hopefully get the truest rate possible in the market far more if you actually went to look yourself. So what happens is with us is typically compared to market average, you'll be 5 times more likely to get funding because there's a sensible voice in there and your accountant that's really helping working with you. And our transactions actually end up being larger, so we can actually get you more money. And within that, ultimately, we haven't actually had a default from any of our lenders, from any of our accountancy introduced business. So, but that's not why we're here today. We're here to talk to you about what's happened to the market and why this relationship has become something so important, and what is the kind of future of the lending market. So first, I'll talk to you. I've just asked you one quick question. Who knows the name of their bank manager? And interestingly enough, who did know the name of their bank manager in the 90s and who has had a complete change of their bank managers in the period of time since then. So this is a scene that's on the street next to my house, and it's a rather more obvious old building that is now a pub that used to be your bank. It used to be our local bank branch. That was actually a NatWest bank branch. And you may see on many of your local streets that same thing. And the question is, what has the closing of all of these bank branches done to businesses and to the day-to-day communities? So over the last 15 years, 15,000 bank branches have closed down. In fact, just here, 13 million people have lost half of their local branches, and Santander is to shut another 140. Interestingly, it's just Barclays have just announced that they will not close a single bank branch for the next 2 years in a village where there are no more bank branches left. So what that means is, just because of a bit of a PR storm on them, they have changed their approach, but just for 2 years. The continuation of closing bank branches will happen, and I'll tell you why in a second. So that's 55,000 bank managers have left. We actually think, recalculating those numbers, that it's probably more. I've just been talking to someone from the Birmingham team in Lloyds Bank, and they've just survived 2 rounds of redundancies, and they know another one's coming in February. So the banks are continuing to reduce their online presence, and they've closed 15,000 branches. And so the interesting thing is why. Why are they doing that? What happened was in 2008, when the credit crunch happened, is most of the banks retrenched their lending quite heavily for 2 years, and they had to change their capital ratios, and they had to basically change some core structures of their businesses. What they realized was that they couldn't actually now afford to have such a on-the-ground presence, such a strong key relationship manager presence. And so they basically stopped helping businesses with a direct relationship from a certain size, and then they focused all their energies on larger, more secured SMEs. So very interestingly, they originally would have a partnership manager, a bank manager of a certain size, and now actually you've really got to be above 5 million revenue, maybe 10 million revenue, to have a genuine day-to-day contact within the bank. But they haven't gone away. Importantly, they are becoming digital lenders. So Barclays now has a digital product, NatWest has a digital product. What that means is you can come and get funding from them, but you will never actually speak to anyone in the process. It'll be very much an online situation. So I hand over to Kaylee.
Perfect. Yeah. So I, as I say, worked in commercial banking and had a portfolio of predominantly agricultural customers, so lots of dairy farmers, etc. And we would go out and regularly see them, be very involved in what they were doing, kind of sitting around the kitchen table, really kind of deep diving into the business and looking at their plans, etc. on what kind of funding they needed. And you build up some really, really strong relationships there, to the point that actually one of my clients had bought me my own pair of wellies for the farm because I kept turning up in kind of high heels and getting me covered in mud. Hence the kind of significance of the photo there. But ultimately what happened is kind of 18 months into that relationship, we got to a point where the bank came out and said, actually, we're doing a load of redundancies and we're moving lots of clients away from these really strong relationships into call centres, essentially, and they will no longer have a designated point of contact. They will ring a central centre and speak to whoever's available, and that will kind of be the end of it, and it will be for this short list of services that are available. And actually going out and having that conversation and saying, you know, I'm really sorry, but actually I'm not going to be your point of contact anymore. You're not going to have that. Here's a number to call if you have any issues, and kind of goodbye was really, really tough. And as a result of that, they kind of didn't have anyone to turn to anymore, which is very much what kind of ties into this piece here around who do they go to. And we at Capitalise very much believe that is your accountant.
So, thank you, Kaylee. So what's interesting here is, now first and foremost, we still love the banks. The banks still put a huge amount of capital into SMEs, but just the certain type of SMEs, and now digitally. What we're talking about here is actually that the bank manager has been leaving the market. And what's really important is that's left a complete void in who is the day-to-day go-to person for talking about funding, talking about the general questions. And it's very much our belief that is now your accountant. Your accountant is the person with the skill set who can truly take over and be that key point. And what we're looking to do is train and help accountants to become the bank managers of tomorrow. So an interesting story on this one is my dad's a hotel entrepreneur, and my brother is about 15 years older than me. And at his wedding, we had two of his Lloyds Bank managers there, the retired bank manager and the current bank manager. And they were his best friends, his key contacts, his lifelong friends. At my wedding, 15 years later, don't really mention the word Lloyds. And we had the accountant there. And my dad's accountant is now one of his true long-term friends into retirement. And what happened in that 15-year period, from about, say 2015, is his go-to person of all his questions in his business changed. It changed from his bank manager to his accountant. And that's very much a trend that we're seeing. And, and you guys are in safe hands with such a great accounting firm as Raffingers. So a little bit of a kind of a story of what's actually now happened since the credit crunch. So a bit of a history, I suppose a history and a future lesson into where's lending going and what's happening with the banking market. So originally, pre-2008, actually knowing 15 or so lenders and the main banks could pretty much get you covered for any lending that your business could have. And what happened after that is the banks left the market and 300 or so lenders entered the market. So there's still continues to be cash available to businesses, but it's just very hard to know where and which one is the right one for you. And actually what's changed is it's not now the bank manager with the big sweep of products that's talking to you. It's actually a sales team who are trying to make sure they can actually hit their numbers and get lending into your business. So what that means is you want to really come to those lenders with knowledge yourselves around whether they're the right one for you, rather than being convinced. And that's a big change in the market. And then, so the banks have used to be one to many, one to everyone, but actually they're really going to struggle doing that now. So actually they've pulled back and they've really focused themselves on secured lending, and they've gone for digital models to help with the smaller companies in the market. And that's the smaller companies are the lion's share of the UK economy and our future growth as well. So it's quite a big change. But people like NatWest have now come back with and built from companies like Esme, which are basically a clone of Funding Circle and iWalker, and the firms that you've kind of seen, arrive with post on your door. They're actually now copying those companies and coming back with a much cheaper source of capital, so actually becoming extremely big market players. Then you've got the challenger banks, you've got your Metros, the Oak Norths, and what I could say is Santerre is probably, I'd say, the biggest challenger bank, who really are quite present on the market as well. But the new wave is the neobanks, the completely online banks. And I'm sure you're starting to see Tide, Starling, Monzo, Revolut, all entering the business banking world, and you can just use an app and you can quickly move on. They typically thought their business models would evolve around charging for apps and things like that, but all of them are now thinking about moving towards lending. So you've actually got even more banks coming into the market and helping with lending. So it might be one day when you can click onto your app and actually use a banking app and get lending that way as well. So that would just mean there's even more choice in the market. So it becomes very hard to know who is the right person. So over to Roy.
Oh, me again.
For the solution.
Right. Yeah, well, the solution's clear. As you've heard from Ollie and Kaylee, the market's changed rapidly. More and more clients are approaching us to find a solution to various number of funding issues they have, whether that's cash flow or growth capital they're looking for. So it was just a clear partnership for us. As I say, with Capitalise, we understand the sourcing of capital needed to grow your business can be a time-consuming and often expensive endeavour, and using the platform just speeds the whole process up. This is why we partner with Capitalise. They're a UK-regulated funding platform designed to help small, medium-sized companies discover finance partners who can add value to your business. And as you can see there, this illustrates just the number of products that are on the market. Through this partnership, we can access, which is over 100 leading mainstream and independent UK lenders to provide you a seamless funding service. By working with lenders who fully understand the unique financial demands of your industries, you'll benefit from their years of experience providing capital solutions to businesses just like yours.
Couldn't have said it better.
Thank you. So we're going to provide support at all stages of the process, from the very initial application to see what products are available to you in your business and sort of in terms of your business cycle and your profits and your results. So funding success requires more than just complete an application. You'll need to provide information that is easily understood and attractive to lenders. So if you're looking to expand your business, you need help smoothing out cash flow, or want to talk about your existing finance, we can assist at all stages of the funding process and position your company in the best possible light for securing finance. We can help you. We can offer what they call a complimentary 1-hour meeting. So that's allowing us to come and visit you, go through your business in more detail. So for our clients, this will be a client review. For those of you who are not yet clients, it will be a proactive accounting meeting. So during this meeting, we can identify your goals, identify your personal ambitions, identify the problems and challenges that are getting in the way of you achieving those goals, and then determine a process that we can work together to overcome the problems and challenges and achieve those goals. We can work with you on a one-page business plan. This is a little bit of a pet project of mine. It's a really important document. It's not just about securing finance, it's about refocusing you and why you're in business at all. Cash flow management coaching. Obviously, cash is key to any business success. So we can help you kind of manage that and get yourself into a routine. We've also got a seminar coming up on the 22nd of November, I believe, and it's 7 ways to grow your business. And there's a little bit more detail to follow on that. And obviously, with Capitalise, we can provide a seamless funding service. So, 7 ways to grow your business seminar, which is being held in London on the 22nd of November. There's going to be a number of keynote speakers at this event. And it's basically just a way of spelling out the 7 ways that we believe are key to grow your business and improving your business performance, maximising efficiency and increasing your profits ultimately. So why should you attend? Look closely at your business and be challenged to adapt. Learn how to set a roadmap for your business. Discover how to measure and maximise business efficiencies. And learn how the 7 ways to impact your profit and cash flow. Learn how to adapt the 7 ways to grow your business. And just to reiterate, it's being held on the 22nd of November. between 3 and 5. If you'd like to attend, as you see at the bottom of that, there's an email address, advisory@raffingers.co.uk. Now, questions?
So we've just had a quick question saying, does Capitalise facilitate lending for sole traders? Yes, it does. Most importantly, as long as you're putting that money into your business to grow your business, then that's some lending that we can help you with.
If there's any other questions, make sure to pop them in the Q&A section. We've got about 10 minutes till this session ends, so put in your questions if you've got them. If not, you can email them to advisory@raffingers.co.uk.
Oh, hi, Roy. Hi, Danielle.
Active
That's
question.
a great question. Even I can answer that one. There is no question there at all. Yes, we can, is the answer.
Just wait a couple of more minutes to see if there's any questions come in, and if not, as I said, feel free to email.
Well, while we're waiting for some questions, yeah, I mean, more and more clients are contacting us, and Capitalise have really hit on something here, that we are the new manager. I mean, I did a bit of research before this webinar, and it's incredible the amount of bank branches that have closed, certainly over the last 20 years. And it's just less and less direct contact clients have now to sort of speak about funding. We find that sometimes clients are quick to go on Google, and sometimes it's the worst thing to do. I mean, please come and speak to your accountant. We can discuss the right funding solutions for you, rather than sort of you ploughing ahead and making the wrong decisions from the start. We have a question here from Emma Cohen. What checks does the company have to add in order to receive the funding?
So
I guess there's a
so this is a really interesting one, because we find many companies kind of get this wrong at first. If you go online and start looking at all the online lenders, what they're doing is checking your credit profile, and each one is doing that. So if you go online and go to 10 or so of them, go and do their quite easy online applications, you actually find you've suddenly put a load of credit checks within your business, and those can be soft sometimes, and sometimes they can be hard credit checks. So what you can do when you're working with us is we'll work with Raffingers to find the most appropriate for lenders, and then we will get to indicative offers with them, and then what you would do is you would choose one of those lenders that you've got the most appropriate the rates, the lender that you believe can support you as a business, and then we'll actually go with them, and that's when they'll do a hard credit check. And that's with one or two hard credit checks not going to do anything to your kind of profile. But if you do go to the wider market and get like 15, 20, 30, which you don't realize are happening, that's when it can damage your profile. But then again, and why do these lenders do these checks? It's really important for a lender to understand that you have affordability and you can pay back their loan, because they're giving you a large amount of money. And so they will have a look at the kind of credit safe and Experian to kind of give them full comfort to give you the money at the kind of end of the process. How long does the process normally take? So if you come to us through Roy over an absolute emergency and you're in utter need of cash flow in 3 hours, we could do that for you. But we won't be able to do that for you in the most preferable rates or anything. We just would be able to get the money to you if you have the affordability. If we're looking at the banks, typically our banks will respond within a few days, but ultimately to set the funding line up, it could take up to 6 weeks. So it all depends on, we've got all tiers of lending on our platform. Some people can give money almost instantly, but obviously there's going to be cost there. Others like to look at it in a much more deep way. And if you think about it for yourselves, what you want to do is you want to work with Raffingers to actually understand when you're going to need the money. And if you come to us with far more knowledge and far more exactly when you're going to need the money, and you've stress tested your business, that's when we can really get you the best and the most true rates in the market. Because actually, with more time, you can get to the better lenders, which have the slower decision making, but have the cheaper rates and the more supportive structures.
Okay, Kay, do you want to answer this one about security?
Yeah, so I mean, in terms of security, it really depends on the product that we're looking at, which kind of goes back to the process piece as well. Depending on the funding product is going to kind of dictate the time and the kind of security and level of complexity that we go into. We have lenders that can look at unsecured debt, which typically just requires a personal guarantee. So there's no formal charge on property at all in that case. But if we're going down a secured route, perhaps it's a bigger amount, and then we can look at taking a charge on the property, and that's often just a second charge. But again, it depends on the lender and the product and exactly what we're trying to achieve and kind of how rate sensitive you may be, and whether you want to look at a much cheaper rate and potentially put your property up for security, or actually you're just quite happy to sign a personal guarantee.
Okay, well, that's our webinar. I hope it's been very informative. I'd just like to thank everyone before we go for joining us. I understand it's been a record attendance, so that's really pleasing. I'd just like to thank the guys from Capitalise, Ollie and Kaylee, who've just given us a great insight into how the market's changed over the years.
Cool, thank you very much for having us.
Thank you.
Oh, got some other question.
Oh, okay.
Oh, what's it on? Right. Sorry, I just read some random.
Right.
Sharon.
Okay, great. Those are good questions. So our funding circle are very active in the market. Would you recommend them, or do you have alternatives? So funding circle are very active in the market, and they're very marketing driven as a company. So they're sending you loads of emails and loads of marketing. Yes, we've got many alternatives to them. So my big recommendation to you is we go to Raffingers, and through them we can go to a selection of all funding circles competitors, not just directly to them. And so the second one is, what are the fees for businesses applying to Capitalise successfully? So good example would be is, say if it went through someone like Funding Circle, we would actually take half the fee that Funding Circle are already taking. And therefore there's actually no increase in the cost. So we would take a percentage of the fee from the lender. So there's no additional fees in using Capitalise.